Hey everyone, and thanks for jumping back into the cryptoverse. Today we're going to talk about Bitcoin and talk about its overextension from the 20-week, now equaling how far extended it was during the move in the summer of 2019. If you guys like the content, please subscribe to the channel, give the video a thumbs up, and also check out the Telegram channel, which you can find a link to in the description below. Bitcoin was 25,000 on the 25th, 26,000 on the 26th, now 27,000 on the 27th. We'll see if we can keep pace with this. I mean, now we're at 27.5K, and volatility right now is just through the roof on Bitcoin. Dominance is going up. Essentially, you know, it's a good reminder as to why Bitcoin, in my opinion, should be the majority of your portfolio, as I've said many times. I know I say that a lot, but I think a lot of people probably can't hear it quite enough. That Bitcoin, in my opinion, you know, it should be the majority of your portfolio, and if it's not, it doesn't mean you necessarily have to make an immediate change, but it should indicate that you should at least take the steps, you know, throughout the next year or so to try to shift it. Again, not financial advice, that's just my own opinion. And that's what I would do. If I found myself in a position where it was not the majority, I would try to slowly make it the majority. Now, we've showed this before, and we're just going to show it again because we've actually reached the point now. This is the log of the price divided by the 20-week SMA, and you can see that in terms of weekly moves here, we are as overextended as we were back in the summer of 2019. These are weekly moves, okay? This is an important distinction. Now that we're here, we also know that there could be some slight differences on say, wicks and short-term moves that are not sustained at all. And what I mean by that is if you actually take a measured move from the 20-week SMA here and go to the top in 2019, it actually went about 120% above it on the wick, okay, on the wick, and it was a very short-term wick. So we look at daily closes. Obviously, this is the closing price, not the wick that ultimately went much higher. So if we were to get to that level, not looking at a weekly time frame, but just looking at the wick, to get to the same level of overextension, it would imply about a $32,400 Bitcoin. Okay, so when you look at weekly closes, which is, I mean, this is about closes, right? This is closes. If you look at weekly closes, we are at the same level that we were in 2019 a couple different times. Okay, in terms of overextension from the 20-week moving average. Now, as we've also showed, there's also this macro trend line down, which we know will break at some point. We've reached this point. If we continue higher, it would imply getting closer to a $32,000 Bitcoin, closer to 32, but somewhere between 31 to 32. If it were to happen in the short term, we would come back up to this macro downtrend. It does not mean we can't break through it. In fact, there's always a good chance we do, but that is where we would come to, which has historically been our local tops. Okay, so that would imply a $31,000 to $32,000 Bitcoin if in fact it happened in the short term. If it takes it 5 weeks, then obviously the price would go up. So coming back and looking at this, in terms of the weekly, we are as overextended as the summer of 2019, but as we also showed, if you want to look at, say, wicks that just shoot up before coming back down, we still have a little ways to go to get that overvalued, right? You can see 120% here to the wick. If we did the same thing today, it would imply closer to a $32,000 Bitcoin, which also, by the way, is around the same level in terms of overvaluation from the fair value regression band, right? So if you look at the fair value regression band and go up from the fair value, which is fit to non-bubble data here, it went up around, you know, I didn't get this exactly on the fair value. If you go here to the fair value, it went up around 195%, 193% or so, somewhere in that ballpark. And right now, we're only up around 142%. To go up to the same level of overvaluation, it would imply also a $32,000 Bitcoin. So we've hit some milestones in terms of weekly closes, in terms of potential wicks that could take us higher. We could still go further and still remain under where we were in 2019. and it would also potentially coincide with the macro downtrend that we showed as well. So right now we're at 27,470. Obviously the market is heating up substantially, and it's leaving, Bitcoin's leaving the rest of the market behind right now. So again, if you find yourself in a position where you don't have a lot of Bitcoin and you recognize now the importance of it, maybe you've heard me say it a lot, but you never really understood the importance of it because it seemed like Bitcoin just didn't move as much as other cryptocurrencies. This is a key reason, because right now most of the market is sitting still and Bitcoin is moving, right? We've said that before. Sometimes Bitcoin will move. It doesn't mean the rest of the market moves. But if the rest of the market's moving, it generally implies Bitcoin is doing pretty well. So Bitcoin's at $27,461, and it could potentially stand to go a bit higher before we even see some type of a correction. So in the future, whenever we do find ourselves back at the 20-week moving average, and you consider ourselves to be still in a bull market, if you do, consider the opportunity that presents itself. If you follow the channel, if you followed it quite closely, you'll remember back over here when we were saying this is the key time to buy Bitcoin, right? Forget about most everything else. When Bitcoin risk is low and it's testing the 20-week moving average as support, this is the time to focus on Bitcoin accumulation, and you see exactly how important that accumulation was. At the time, did I know we were going to go to 27,000 in the short term when we were at $10,000 back in September? Of course not. No idea that this was going to happen. But it just goes to show you how just sticking to these principles and saying, you know what, if the risk on Bitcoin is low and we're testing the 20-week moving average as support, we know if we go up or down, Bitcoin dominance is likely going to rise. And if we hug the 20-week, Bitcoin dominance is likely to rise. There's just so many scenarios, basically up, down, or sideways at the 20-week with a low-risk Bitcoin, the dominance of Bitcoin is likely to go up. And that's just something to always remember. And if you feel like you were left behind in terms, on this run, if you feel like you missed out, I think there's still plenty of time, right? The market cycle, however long it lasts, right? There's going to be plenty of times, I think, to continue to get into Bitcoin. And another thing to remember is you can always buy Bitcoin to a higher risk level, right? You can always come in later. Again, I've always said I don't know what the short-term ROI is going to be, but I still think that Bitcoin will trend to six figures over the next few years. And with that in mind, if you're okay swallowing a short-term loss in the event that it corrects, then there's nothing necessarily wrong with continuing to accumulate at these levels, right? There's nothing wrong with that. I'm coming from it from a biased perspective because I spent 2 years accumulating at under $10,000, $4,000, $5,000, all the way up, right? So when you come at it from that perspective and you're buying it at 4K, one thing to consider, if you bought Bitcoin, and this is what some people, I don't think it necessarily instantly makes sense to some people, but imagine you were buying Bitcoin at $4,000. Okay, the current price is $27,474. So if we were to divide by 4,000, you're already up almost 7x, so 6.86. Okay, for you, if you did not buy Bitcoin at 4K and this is your first Bitcoin purchase at 27K, we're just going to multiply that. You would have to get to $188,000 Bitcoin. So it shows you how advantageous it is to come in during the bear market. We said it so many times during the bear market. Bull markets can make you money, bear markets can make you rich, because there's going to be new money coming into the space, buying up here for the first time. And if you were buying down here, you're already up 7x. Okay? For these guys that are first buying it up here, for them to experience the 7x move, it has to go to almost $200,000. Okay? And if you didn't sell anything up until that point, then you would be up almost 50x if it went to that level. So it really does drive home the point that when Bitcoin is in a bear market, it is such a great accumulation time, right? It's hands down a great accumulation time. And when we find ourselves in that, again, in the future, my interpretation is that bear markets for Bitcoin will actually become tamer and that they won't be as bad in the future. mainly because as we continue on, right, we know that volatility, macro level volatility is decreasing. You might look at this and be like, how can volatility be decreasing? We're going up substantially. But if you look at annualized volatility, it does tend to be going down. It's trending downward. So in the future, I think that bear markets won't be quite as bad. And I think part of it will be because people will recognize, how great of an opportunity it is when we are in bear markets, because every bear market so far, we've always come out and ultimately printed higher highs. We peaked. I mean, if you go back and look at the chart, here we peaked at $32, came all the way down to $2, but ultimately went on to higher highs and went to $1,200, back down less than 200, all the way back up to 20,000, almost back down to 3,100. Now we're at 27,500. So as this becomes more apparent, more and more people will come into the space. I think Bitcoin will probably be, again, like it was in the 2010 decade. I think the 2020s, Bitcoin will probably contend to be one of the best investments you could make, especially in terms of risk-adjusted returns, right? There's going to be some altcoins, of course, that outperform it, but Bitcoin is obviously like the most obvious, least risky choice in terms of the cryptocurrency asset class, in my opinion, right? So we'll keep an eye on it. Note that in terms of the 20-week moving average, we are fairly overextended as we were on weekly timeframes dating back to the summer of 2019. In terms of daily wicks, we would need to go a bit higher, maybe another $4,000 higher, $5,000 higher, and then we would be just as far extended on the daily time frame, and we would be hitting that macro downtrend on the on this indicator, right? We would be hitting that macro downtrend as well if we were to go up to say $31,000, $32,000. Of course, we do know that this will break eventually, as I've said before, but we'll continue to keep an eye on it, and maybe it could help provide some guidance. So if you guys like the content, please subscribe to the channel. We'll be here every step of the way. Make sure you give the video a thumbs up. Check out the Telegram channel in the description below. And also, remember, we do have the premium list. You can find access to that in the description below. We do have a holiday sale going on. Make sure you sign up before the prices go up. You get access to the weekly reports, the weekly videos, the risk dashboard, which is what I use to trade, the premium Telegram alerts channel, the Telegram chat room, and a few other things. Also the trading view indicators. So make sure you guys check it out. We'll let it go a little bit longer before we raise the prices again. Thank you guys for tuning in. Please subscribe, and I'll see you next time. Bye.